It's red across the board on Monday as global markets continue their sell-off into the weekend and into today. The S&P 500 is down 1%. The Dow Jones is down 300 points. Asian markets are down. Oil is down 6%. Bond yields are down. The DXY, the dollar index, is up. And gold retreated yet again on Monday for the second session in a row, down 1.6% today as we speak. Todd Bubba Horwitz, Chief Market Strategist at BubbaTrading.com, joins us today on this very tumultuous market day. Welcome back.
David, it's always a pleasure to be with you and Kitco. Glad to be here.
Yeah, what a day, Todd. What a day. Your first reaction to everything that's going on right now, and we'll drill down to specific assets.
Well, David, I don't think there's much. I'm not really much surprised at anything that's going on right now. I think that the equities are going to go significantly lower. I've talked over a number of months that equities I thought would go down 40 to 60%. And I think we've now just begun that journey to take us lower. Now, there'll be some real big spike rallies in here somewhere, but we are certainly in an ugly downtrend. And, you can tie in a lot of things to this, and none of it being Russia, although Russia is a part of the equation. But, the shutdown in China is going to hurt, obviously, lots of businesses because there's not going to be goods. We've already got supply chain issues. And so that creates a very big ordeal. You've got all kinds of geopolitical things happening. We're going to have probably a food shortage next year based on, what's going on in Russia and Ukraine, because they do supply 30% of the wheat crop. And we don't have, Mother Nature is not cooperating in the States. And that's following up with Australia and Brazil that already missed. And the metals, this is an interesting look here. I mean, certainly the colossal failure up at those key resistance levels has sent gold and silver spiraling lower. Now, at some point, they'll find a base and we'll probably see a rally. But I think you may be seeing selling in here to add a little bit more pressure to Russia, because it does affect them, especially now since they've benchmarked the ruble to the price of gold.
All right, let's talk about equities first and then gold. So stocks are down, like you mentioned. A lot of factors involve Russia, the slowdown in China, potentially causing a global slowdown. On the COVID front, now, Todd, I know neither you and I are medical experts, but what's going on in China? Could that spread to other parts of the world right now again? And even if it does, what's the likelihood that governments can shut us down once again?
Well, again, I don't know about, China to me is you never get true facts out of China. And this may just be more of a power play in China by their government. They're obviously a communist country, very tightly controlled. So it's hard for me to put any faith out of China. I don't think COVID is the true reason. I think that COVID has been, again, it's under control. And I think if you look at some of the statistics based on how they've been reported, I don't know how COVID suddenly dramatically increased the flu, but the numbers are actually similar. Before COVID ever existed, we had that many cases of flu every year. So to me, I think it's a bunch of bunk. And I think that, in certain countries, you may see some shutdowns. I mean, certainly in Canada, you could see a shutdown because you're basically running under a socialist regime. In this country, I think if they tried to shut the country down again, I think there would be a major problem and probably a revolutionary war in the United States of America. I think that people are sick and tired of the controls of what government is trying to do. And I think that it's really more of a reason they're trying to get to globalization versus actually take care of the individual citizens of those countries.
Okay. Well, yeah, that aside, the equity markets are not taking the news well. Whether or not the information coming out of China is factually accurate, the stock markets certainly are fearful. Is it just because of COVID, Todd?
No, it's because of the supply chain. It's because they're not going to be delivering goods. It has nothing to do with it. Maybe COVID is the reason, but it's going to be the supply of getting the goods that you need. You remember, a lot of our drugs come out of China. There's a lot of things that come out of China for no apparent reason as well. So this is the bigger issue. Again, COVID, or whatever reason, they're not delivering. They're not delivering, which is really the bottom line. And what money cares about is, are they going to be able to make money? And certainly retailers are going to have a big problem making money because they're not getting enough goods to sell enough.
What's that going to do to prices? What's that going to do to inflation?
Inflation's going to the moon. We're only in the early stages. I mean, first of all, the CPI number that's reported here is ridiculous and laughable because they don't count food and energy. They don't have very much weight there. So food and energy, other than a furnace
Well,
breakdown.
headline CPI has food and energy, right? Core CPI exclusive, but headline, has food and energy.
But it only counts in 4%, which is ridiculous in comparison to what people pay for. Okay. Again, if you talk about your true real expenses, barring an emergency in your home or something that has to be replaced, your number one cost during a year is food and energy. And if you have food and energy going to Pluto, crude was $30 a barrel after the election. And now it's it's back to under 100 right now. It's 95. But At the end of the day, it was 125. We're paying so much more at the pump that people are having to make a decision on how much they can drive versus how much they can eat. And this is going to be a much bigger problem. These prices are going much higher, especially anything that has to do with wheat or soybeans or corn, because those are also exploding higher, although they're a little bit lower today.
Okay. A couple of points you brought up. First of all, the Fed's rate hikes this year. Jerome Powell did say last week at an IMF meeting that he foresees the Fed to raise rates rather, at a quicker pace than anticipated. So 50 basis points could be the next hike in the next meeting. Do you think that's going to be enough to bring inflation down?
No. Listen, the Fed is so far behind the curve, David, that they should have started raising 10 years ago. Okay. Now, even if you raise rates two full points, you're still nominally at negative rates. Take the 10-year note, which is getting closer to 3%, and subtract it from what the CPI is. That tells you that you're operating at a negative basis. You have continuing falling wages. So you're not going to stem inflation with a half a point. It's what their interest rate's going to do now is it's going to slow housing and slow other parts of the industry, because the other problem is employment. Okay, so you're really running into what we would call stagflation versus anything else, which is going to be even obviously a bigger problem.
Well, oil is down today. I guess that's on fears of a global slowdown. But you're saying that food and energy, well, we'll come back to food, but energy first. You're saying that energy prices are going to continue to go up to the moon?
I think that crude oil has a chance to make the all-time high, okay, which is about 150. Okay, I don't see, you got to remember the energy policy in this country has changed, and we no longer are a net exporter, and we are now more dependent on foreign people to survive, to supply the United States. Now, those people that are our suppliers are also kind of our enemies, all right? And again, they're not going to bring prices down. President Biden can beg all he wants, but they're not going to bring prices down. The solution to all of this is to go back to fracking and shale producing and go back to being a net exporter. But we keep hearing about this climate change, which is another joke, because at what cost do you want to get the climate change? If you believe in it, then at what cost do you want to take to get there? And you're destroying a class of people in every country. The middle class is getting destroyed by these policies that are made country to country.
So what you're saying is that the government, in order to help facilitate a slowdown in inflation, they need to encourage fracking, shale, and oil production in this country. But instead, they're focusing on ESG policies and the Build Better plan and green energy and all that.
100%. That is exactly what I'm saying.
Okay. All right. Well, that's not going to happen anytime soon. So unlikely, at least. So perhaps you're right. We'll see $150 oil. I don't think we've seen that. When was the last time we saw that? I'm correct. My memories. Okay. And before that, there was a war. The Gulf War spiked oil prices.
The prices were going to Pluto. Again, very similar to any market meltdown and collapse comes these wild high commodity prices. And that's what we saw in 08. So again, we're seeing almost an instant replay right now. And again, we'll see how it plays out. But basically, we're seeing very much a replay to what we've seen in the past.
What was suggested here in Canada, in Quebec, where I live, spot oil is going up, but it was proposed to the finance minister of Quebec that they lower taxes on oil, because a lot of the oil prices at the pump, the big chunk of that is just taxes to the government. The government said, no, we have to collect taxes. So sorry.
And therein lies my answer to you. Okay. It's the governments that are causing this, which leads back to globalization. Okay. This is not a true market. that we're actually developing because of the taxes, because of all the reasons. I mean, we had President Biden come out months ago and blame the oil companies for gouging, but what he did not neglected to say was that they're if you're paying a 20% tax at the pump, which is about what it comes out to, then if it goes up $1, you're going the 20% of that is the actual tax to the government.
Okay, well, where I live, they're not going to lower taxes. I don't know about where you live.
They're not going to lower taxes anywhere. This is, again, and inflation is also a tax. Remember, inflation is a tax, and wages, even though they may be rising, you're making less money based on what you have to spend and based on what your currency is worth.
It just strikes me as that the people are proposing a way out for the government. They're saying this is a direct way you can help us, and they're not taking it. What else can the government do? Midterms are coming up, Bubba. What else can the government do to lower prices and help the middle class, if anything?
Well, don't forget, your government also stopped fracking for natural gas or drilling for natural gas. Okay, they will not allow them to get any more, and and you have plenty of supply. This is the problem. Is that nobody wants to let the capitalism and free markets work correctly. They want to dictate the terms because they want control of the people as they head to try to control the currencies and bring in a digital currency across the globe.
All right, let's link it back to markets now. So nothing can be done so far in the short term to lower inflation. So I guess we're going to expect higher inflation, right? There's nothing else that can be done.
No, I mean, again, interest rates are going to go up. That's not going to curb anything. Okay. Right. And the way you can do it is you need to use your own resources to bring down the prices of goods and services, which you're not going to do, because if you go back to fossil fuels, 80% of everything you use has something to do with the fossil fuel. Okay. So this is the problem. Not only does it affect the cost at the pump, it affects the cost at the retail store as well, because getting the goods there brings up more costs. Again, this is a vicious circle that could be easily dealt with, but nobody wants to deal with it.
I guess it depends on demand as well. For certain goods, fun fact, just FYI, the price of chicken wings has gone down across America. It spiked up during the pandemic because everyone bought wings when they were at home. I guess now they're buying something else. But certain goods are seeing less demand, and so we're actually seeing prices fall.
There is one thing about wings and chickens and things like that. There's a big poultry problem, and they've actually the poultry has gone up about 70%.
Wow. Okay, I didn't know that. All right, but that's a good point. So I guess depending on supply-demand fundamentals of certain goods and sectors, we could see potentially stabilization. But overall, okay, you're saying inflation is going to go up. You mentioned food. Yes, you're right. Ukraine is the breadbasket of the world. The country's being ravaged by war. Food shortages are to come in Eastern Europe. But surely we as North Americans, we can get food from other places, right? It's not going to affect the entire world, or is it?
Well, no, it's going to affect the entire world, because also Brazil, who's a big producer, had a very bad season. Australia had a very bad season. So your supplies are lessening. And certainly now here in the United States, it's planting season or the end of planting season, and we are having weather problems. So we're having trouble getting into the ground. Tie that into some of the small farmers may choose not to create a product this year. Because why? Because it's too expensive to borrow money. So, everything is in a vicious cycle, which could easily be cured by bringing down your key natural resource. But again, this goes back to the same thing, and we're talking in circles. But at the end of the day, we got problems. And if Mother Nature doesn't cooperate, and so far she is not, there's going to be a food shortage. And it may not affect Canada. It may not affect the United States because we'll pay more for it, but we'll get it. However, it will affect many of the poorer countries, and you can bet your sweet potatoes that there'll be a war in Egypt because they need to have that Russian wheat, and they won't be able to have bread. And just go back to Marie Antoinette, let them eat cake. Okay, that was why she got her head, because they couldn't have bread.
Yeah, well, they're not going to have cake either, Todd. If that's if what the scenario you're is describing is playing out. This is a statement that an economist I spoke to recently gave me. Agree or disagree? Food prices have not seen the real rise that we're about to see yet.
Agreed. I think they're going much, much higher. Okay. I think the first problem is when you go to the grocery store, there's a very big shortage in a lot of goods already. I've been sending out pictures to my members of empty shelves in major department stores, not major, but major grocery stores. And I've been showing them, and it's been going on for months. Okay. So now we're going to start seeing probably some of the hoarding that's going to go on, which will then create even more of a shortage, which is going to create higher prices. That is, again, that's pretty simple math.
Okay, let's link it back to your gold now. So your thesis is higher inflation and potentially a slowdown in the global economy, which is already happening, by the way. So I guess that means stagflation, but gold doesn't seem to be reflecting that, at least not recently. We've had 2 drops in a row, significant drops, 1% on Friday, another 1.5% today. It's certainly not acting as a safe haven against all these equity markets declines. So why is gold not behaving as you would expect it to hedge against higher inflation, hedge against equity volatility, and so forth?
Well, first of all, gold is never a hedge against equities. Okay, that's a misnomer. Gold is a hard asset. It's a hard asset commodity that is under some pressure in here. But remember where it just came from. It was under 1,800, and we're still up almost 1,900, and we're at almost 2,000. I think today and the last couple of days, because of the dramatic selling in equities, you're seeing basically just sell everything, get me out of everything, or I'm selling gold to finance some other positions that I have on. I think that gold will find a bottom and find a base, and it will do what it always does. You know, in 1999, gold was $100 an ounce. I mean, now it's 2,000 basically. So again, it will rise in time. We cannot look at markets from second to second based on what they're benchmarked against or what's going to drive them. Right now, you've got a little bit of a panic going on, and they're selling everywhere.
Right. Do you think the announcement by Jerome Powell last week about the quickening of Fed rate hikes has anything to do with gold's drop over the last 2 days?
I don't think so. I don't put a lot of stake into that news. I got to say to you, David, that I believe, in my opinion, all of that news has been priced in all along. Anyways, everybody knew they were going to have to raise rates fast. So I don't think this has really caught the markets by surprise. I think that people look for a reason for why the markets are going down. The reason markets are going down is because they're in trouble, because they've been setting up for this down move for quite a while. Just look at the volume. Look at the volume in gold. It's very light in comparison to the amount of selling that you're seeing. Look at the volume in equities. It's getting heavier, but it has been the most ridiculous volume I've seen in 44 years as a trader, which was just telling me that they were allowing retail traders to buy before they whack them. And that's what I think we're starting to see.
You haven't seen what exactly in 44 years in your career?
I haven't seen this lack of volume in markets and this lack of participation in 44 years.
In the gold market?
In any market.
In any markets. What are people doing? They're on vacation, or what's going on?
No, you're seeing a lot of the institutions, funds, and commercials are letting their retailers step in, and they're cracking them, which is why I think we're seeing this meltdown. Again, I think that there's positioning and playing the markets the way they are and following the price action. And since we've subsequently made lower highs, okay, that just shows that we're certainly in a significant downtrend.
Okay, so let's move on to your outlook there, and we'll close it there. You have mentioned to me before that equities are expected, or you would expect equities to decline further in the year. So far, that prediction has played out to be correct. There's been a number of factors that have contributed to this equity market decline. Can it continue, is my question? Or is this sort of the bottom for you?
I don't think the equities are. I told you, I think we're going down 40 to 60% before this is all done. Now, there will be some rip your face off rallies that will show up. They will be short covering. They will be short lived. But if you understand markets, you know that when the short get trapped, they chase and pay any price. But if we're in a downtrend, their sellers are going to find another spot to sell them, and they're going to go a lot lower. I don't think we're anywhere near a bottom right now. I think you can see this exist through the end of the year and probably into next year.
So new market entrants should not be catching the knife right now?
You should never try to catch the flying knife unless you know what you're doing and you're hedging it behind it.
Okay. And gold, let's give your gold price outlook for, I guess, for the short term, and then I guess for the rest of the year as well.
I think gold will make new highs this year. Again, this to me, what's going on now was predictable when it failed to take out 2,000. It was above it for a few minutes and it could not take it out. I think that it'll find a bottom sooner and will start to move higher. And I could see new highs in gold before the year is out. And I expect to see silver to make a nice run. Now, I don't think silver's going to make new highs at $50, but I do think silver will be over 30. And I think silver is going to start to make a run. And I think even the biggest dog of the metals complex has been platinum. And I think that'll start to make a run. But right now, they're just under pressure.
And what are the biggest macro forces behind this bull run in gold and silver later on in the year, you think?
Well, I think it's going to tie back to some of the inflationary issues that you're talking about today.
Okay.
It's going to tie back to people are going to be looking for places to invest their money. Okay. And of course, I'm a big believer in buying gold. I think that you have to be able to buy what you can afford, then store it or take delivery. I think the paper gold is what causes a lot of these bigger swings, because paper gold is I don't think there's enough gold in the world to cover all the paper that's out there. And I would never own paper gold if I was looking for a long-term protective investment, because listen, at some point in life, gold, silver may be needed as a currency. Okay. Just remember that. I'm not saying it. I'm not saying it will be, but that would be another reason to own the precious metals.
Okay. Well, I look forward to the day I walk into McDonald's and pay with my silver coins. I think diversity is always well. First of all, I think some places in the world accept silver and gold as currencies, right? I can't remember which country.
I mean, there's people that'll take it, but I mean, there's not a true currency system anymore. But sure, if you get the right vendor, they'll take it.
Right,
okay, well, just like some will take Bitcoin. I mean,
Yeah, Bitcoin is legal tender in El Salvador and maybe some other countries to come. But you're right. So, Todd, a great talk. That's a great topic for another time. But excellent thoughts today coming on. Thanks for coming on today.
Thanks, David. Appreciate it, brother.
All right, and we'll speak to you again soon. Thank you for watching Kitco News. I'm David Lin.